Well, and then we talked a little bit about this. I know, Chris, you'd done some work a while back on the commodity super cycle. Do you want to talk a little bit about that? Like, where are we in a super cycle now, or just tell us the history of it?
Yeah, so that's something that's being floated certainly right now. A super cycle is there's no real exact definition, but it's really a 10 to 35-year period, really, where we see commodity prices steadily kind of increase. They're in a kind of slowly moving upwards. There's been four, noted super cycles since we've been able to have the data. The first one happened. They usually happen around large, whether it's economic or global events. First one was in the 1880s when the U.S. kind of came into its own as an economic powerhouse. The second one was the lead up to and the rebuild after World War II. You had a lot of public works projects.
Hoover Dam and all that stuff.
Exact great example there. I mean, amount of raw materials, and you also had rearmament for World War II. A lot of tanks being built. That's a lot of steel. You had just a lot of production there. And then obviously, after the devastation of Europe, you had to rebuild it. So there's a lot that went into that. The 1970s, you had supply shocks that were, oil prices were rampant. You had the Cold War really going on. A lot of unpredictability. And the product was prices of commodities.
Yeah.
Brian, you could probably even speak a little bit better to that. But
I was around in the 70s. I remember it well. The gas lines in front of gas stations and everything else. So oil price shocks. How about the 90s too? There was a cycle then involving China, starting with China, right?
Yeah. So we had, late 90s, we had China kind of coming into its own from an industrialization perspective. And that's really what drove really the latest commodity super cycle. And some could say that we never really got out of it, but most people have it clocked at around 10 years that we kind of started to decelerate slightly, starting around 2010.
Yeah, 2010 was a huge commodity year, but then it's been pretty rough with a little bit of a 2015 rally in the short run ever since. And then after 2015, we went into a serious commodity bear market for 4 or 5 years there, and we're only coming out of it now. But so, Chris, a year ago, before the pandemic, we had the best economy in American history. There was no commodity cycle. There was no talk of commodity cycles. Now we go through a year of pandemic. We're coming out of that. There's a commodity cycle now.
Yeah, and there's, we're definitely seeing commodities surge, whether it's what would be, quote unquote, a super cycle is unknown right now. But, some of the drivers, some of the people that would make speculation would say, we are seeing a societal shift. People want, some would say more space. So we're going to see a lot more building. We've talked about the infrastructure bill going through, trying to be pushed through Congress. That would obviously harken back to the Hoover Dam, public works, a lot of that, which would, also talk, we could see. And then I think the biggest one is that from a global impact is that the case to be made of people wanting to go towards more environmentally friendly, whether it's electric cars, you have kind of ESG, you would say investing, but cars, you have windmills, things like that. People trying to pivot to those, and people, that's politicized and everything, but from a commodities perspective, it's very real. And especially with some of those rare earth metals, those have been in the news a lot. Those definitely don't take maybe the same exact commodities as you would expect, but we still see the same kind of boom in overall commodities. So it's going to be interesting to see. We don't know. Are we in a super cycle? Are we not?
Or is it just a pandemic-induced thing?
Is it a blip? Is this just a blip because we were in this horrible place? We're out of it. Infrastructure has always been on the table in the U.S. and the U.S. isn't going to be probably the primary driver. I would imagine we would need to see China or India as also a big driver if we're going to see a global commodity super cycle. We just don't have as much power as we did back in the 1930s.
Well, and a year ago we didn't have galloping real estate prices either, Chris. But now we're seeing real estate prices galloping higher. But maybe it's only the areas where prices are going up dramatically that everyone's noticing. Certain areas are not growing as much, but they're growing somewhat. But I saw a recent discussion in Inman News, which is an industry real estate real estate group that talks about real estate prices and brokerage and the whole industry. And they talked about how there's been less home starts for quite a long time now. We went through the worst real estate market in American history, at least on record, between 2005 and 2012 when it finally bottomed. And so then we've seen people getting back into real estate. But all along for the last 15 years, we've seen less housing starts than normal, than average. And so now the thought process is based on that there's pent-up demand. There's millennials that haven't been purchasing homes. With Obamacare, people are staying on their parents' insurance longer. It's almost like a signal that maybe you grow up when you're in your late 20s and not in your early 20s. I think things have changed a little bit there. So people are now coming off all those programs, and millennials are wanting to buy places. So it's possible that that's true, that the big real estate super cycle is causing real estate prices to move up. But again, we didn't see this completely last year at this time. So, it remains to be seen. And also there's a lot of changes just in the way we operate. Ever since the pandemic, people are making changes, plus time marches on. So a lot of the factors that might have driven real estate prices, maybe they've changed too, but just the base level, there's an underinvestment in new homes. So there's very limited supply. So prices are going up and people are buying homes. And so that's part of this whole inflation thing, Chris, isn't it?
Mm-hmm. Yeah. And as being from the millennial generation, I can speak to, I think that you go back 5 years and people were the premise was, are millennials ever going to leave the city? And it's just, they're defining, a whole new generation. Now fast forward to where we are now, it seems like that wasn't necessarily the case. That I think, the millennial generation just delayed really their home buying maybe 5 to 10 years. And I think a lot of that coincides with college debt, finances, possibly Obamacare, kids staying home with their parents more. There's a lot of variables to it. I do think that, as a generalization, millennials tend to be having kids a little bit later. They want to be more financially secured. So I think you're seeing that trend. I think it's going to continue to play out. I think that, it just took another 10 years really before we really saw this generation kind of evolve to what, was being expected 5 years ago.